Welcome back to Next Gen Investing. Alex Coffey alongside Caroline Woods. It's time for Under 30 as we welcome in Kevin Green, Senior Markets Correspondent for the TD Ameritrade Network to discuss Upwork. Impressive results here, kind of impressive rally as well from the company. Stocks up about 3.25%. Kev, what stuck out to you?
I think it's overall the adjusted earnings per share growth. We actually saw the company report 10 cents per share when it comes to the adjusted earnings per share. Street was actually looking for 1 cent. So technically it was a 900% beat on the bottom line here. Still seeing some decent growth when you're looking at the revenue number, especially on a year-over-year basis as it's trying to expand its business. It was actually printing in around 7% year-over-year growth when it comes to revenue. I think when you're looking at this type of company here and the market dynamic that we are in, especially in the job marketplace here, it could have some potential upside continuing to go and run here because it's kind of the best in both worlds. You have the opportunity that a lot of organizations may not want to bring in additional headcount, so they might be looking at independent contractors, which is definitely within the wheelhouse of Upwork. But you also have a situation where if we do see a labor market that's starting to soften up a little bit, those individuals could either get new jobs or they could try to become independent contractors themselves to try to get through it. We saw the same type of market dynamic in 2008 through 2010, and that could be the same type of dynamic we see in the next couple of years from now if we do see this soft landing in certain areas of the market, but starting to see a little bit of an uptick in unemployment claims and things of that nature when it comes to the labor market. So I think overall they're positioned in a pretty decent way. They've been trying to invest in the right areas, trying to trim costs in other areas here, and it is trading at a significant area of resistance at $15. The bulls would want to see it above that level, especially on a day like today where you have some considerable amount of volume when you look at the 30-day average here, and hopefully we actually do see the stock pop. Just one thing to also note when we're talking about the volume, yesterday when we did see around 21 and 22 million shares traded, there was about 6.1 million shares that were actually shorted at this level. So there are some short players getting into this market that are not believing that this rally could actually last. Let's see how it's going to pan out here in the next couple of weeks.
So Kevin, we have Upwork, which gives us kind of a good view of the freelance community. And then, of course, we had the July jobs report come in a bit cooler than expected today. So I guess what can we glean about the state of the labor market right now?
I don't know if we can take a trend off of just one jobs report. Obviously, it was a little bit softer than what we have expected. But when you look at some of the internal metrics there were still some pockets of strength. And that's where we had to really kind of be focused on. The small businesses and mid-sized businesses are still hiring at a pretty record rate at this point. The participation rate did not move at all, but it didn't also go down. So that's also a good trend. You want to continue to see that participation rate going up. That means that participants that are on the sidelines are starting to get back into the marketplace. That also could cool wage growth, and that's where we actually did see pretty strong numbers, the wage data for today, and that's kind of maybe a little bit of the reason why we saw a little bit of choppiness when the report came out, but I'm not sure if we can really glean a lot from this report. Now, if we see 2 or 3 or even 4 months of this type of trend where we start seeing jobs starting to decline as far as originations, or even if we see negative prints, I think that's when we're going to be able to see the impact when it comes to Upwork because of its impact that it has, or the direct impact that it can have when it comes to independent contractors and things of that nature. But Caroline, you also just keep in mind here, independent contractors tend to see a fair amount of demand in the marketplace once you start seeing a macroeconomic headwinds, because enterprises, once again, don't want to bring on full-time employees. It's a lot cheaper, if you will, in some respects, from a benefit standpoint, to try to get independent contractors. So if we start seeing that type of trend from Upwork's data, then that could also indicate that softening is to come here in the broader labor market.
Good stuff. Kevin Green, great insights. As always, we really appreciate the analysis and the commentary.